think you can now start. Right, so I'm not going to delete the current analysis that I have here. All I'll do is that I'll go to a different chart. I'll go to a different chart so that I don't delete my current setup there that I'm currently having. Let me see. Right, I'll just go to a different setup and everything. I'll start with, remember, when it comes to analyzing and also when it comes to trading, you don't trade everything. If you see yourself trading everything, you are still a beginner. You're still a beginner who still need a lot of help. You need a lot of help. You need a lot of help, a very, 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 very serious help. So you don't trade everything. There are so many pairs. The reason why they put so many pairs is so that even people who are immature, you'll be confused, and what they're going to do, they will let you wander around on the pairs, wander around everywhere on the pairs. They know so long you're wandering around on the pairs, you never master. You never master anything. You never master trading at the end of the day. So if you find someone who is trading everything, almost every pair, they're also still immature to have an understanding that you don't even need to trade all those pairs in order to make money on the market. In order to make money on the market, you simply need to specialize on few pairs. Those in the mentorship class, they know that I've told them over and over again, find one or two pairs that you focus on. For example, this side on the synthetic pairs, find one or two pairs. Three, let it be the maximum. Three, let it be the maximum. Because doing so, it will help you to be able to discipline yourself, knowing that when it's time to enter, I'm entering. When it's time to wait, I'm waiting. It will also help you even to fully maximize on opportunities and not miss major opportunities. When you're trading 5 pairs, 10 pairs, all of that. When you're trading so many pairs like that, you're everywhere. You're everywhere. Your attention is divided. Once your attention is divided, it's so hard to even maximize. For one to fully maximize, if their attention is so divided like that, it's so hard. It's so difficult. It's so hard. So most of you, the reason why you are still yet to master even trading as a whole, right? Obviously, without talking about some of the knowledge that you are being exposed to, which is wrong, without talking about that, but simply talking about in general why most of you are not mastering, is because of the reason of you are everywhere. You're everywhere. You're everywhere. 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 You're trading every pair, everything that is moving on the market, you are there. So that's a big problem. A big. That's a big problem that you need to work on. If you don't work on that, you will find yourself missing all the major moves on the market. You'll miss them because when you chase 5, 10 pairs all at once, you find out that you might even fail to catch one full move on the market. So if you are still trading all those so many pairs, my brother, my sister, it's time that you wake up and minimize the pairs. Minimizing pairs is actually the first sign of discipline in trading, is when you are able to minimize your pairs. If you can actually manage to reach an extent whereby you trade one pair, that's one of the most disciplined people in trading. A person who is able to eliminate all the pairs, all the other pairs, and focus on one pairs. If 2, it's fine. 1 or 2 pairs, that's okay. 3, let it be the maximum. So I'm not going to talk about how to select pairs in this particular video. Those in the mentorship class, they know the criteria that I told them to look at when it comes to selecting pairs. There are pairs that you never find them trading. You never find them trading specific pairs in the $1 million class, because in the mentorship class, I mean, there are pairs that you never find them trading because of certain reasons that I mentioned, right? So I won't talk about that. For now, I'm focusing on analysis. So Boom 500, as I've been explaining. So here on the daily, it looks like it broke out here. But if you go to the weekly, you saw that this trading view.binary, It doesn't offer the weekly. If you go to the weekly, this thing never broke out fully on the weekly, right? That's not a breakout on the weekly. On the weekly, if you go to the weekly, they didn't break out there. All they did was to come wipe off liquidity there. So according to the weekly, that's simply a wipe off liquidity, right? So if it's a wipe off liquidity now, it means we are still maintaining our overall bearish bias. Lower high there, lower low there, swing lower low there, swing lower low was there. Then there, according to the weekly now, they didn't fully break. So for now, we can say that's our previous lower high, which is almost equal to that one, right? So if it's like this now, it means, what does it mean? If you are still maintaining an overall bearish order flow market externally, it means we'll be breaking the laws, as you can see here. We're breaking the laws here. The swing laws, they are meant to be broken. So long we're still in a bearish order flow market, the swing laws must be broken. So someone can also come here. So if ever they are now going, let's say someone can come and say that is now a higher high, right? Let's say you say that's a higher high. At the end of the day, we all must agree that in as much as that will be that, there are certain actions that must happen, right? For example, if it's like that, down here, let me see if ever there's an untapped demand down there. This one was tapped. That one was tapped. That one was tapped. That one was tapped. The latest one is this one. Right, let me remove this and put this one. So we all must come to a certain agreement at the end of the day, in as much as someone might say this or say that there are actions that must happen that are irregardless of whether that one is a higher high or this is the same high. So one of the actions was here. After that internal change of character, remember, we're going up. As the market was going up, this was bullish order flow. High highs, high lows, high highs, high low, high high, high low, high high, high low, high high. So like that. So they finally managed to break that bullish order flow here. So them breaking that bullish order flow here, the move that initiated this it started here. That's where the institutions initiated their initial moves. Remember, the institutions are the ones who move price, not retail traders. So what they will do now, they'll come back to test that level before they continue down, right? Continue down. I'm targeting either this one, because if they go up from there, next time they come, they will have to break this, because inside they will now be obeying bearish order flow. They will be moving like this. That's a lower low there. That one will be a lower high. So coming there, it will be a lower low. Maybe they pull back, give you a lower high. They can even come all the way down to this low. They can even come all the way down to that low, respecting that bearish order flow now. You see? So my bias on Boom 500 right now, remember what I showed you even in the previous video, that I'm anticipating very beautiful swing buys. But I say I gave you a but. If you remember, I gave you a but. There's something that must happen in order for us to fully confirm that we're now fully going up. One of the things is this daily inner lower high there. It must be broken. Once they break there, they now have power enough to pull back into the premium before the continuation. Pull back into the premium before the continuation. So even up there, that's a trade that we are looking forward to, which can happen maybe around next week, but one around there. But whichever way or whichever day it comes, we'll actually be ready for the trade up there. Swing, sell from the top there. Right. So that one is just a trade that we are looking forward to in the next coming weeks. But for today, we are currently at a major point of interest. Major. We are currently at a major institutional zone, according to the daily. So institutional zones are the ones that offer high probability reversals. If you want to see high probability reversal points on the market, identify institutional zones. Institutional zones, I'm referring to your supply demand your order blocks, your favorite gaps. Those are institutional zones. Support and resistance, those are simply retail traders, retail trading zones that are also bound to a lot of manipulation. So here we have an institutional demand there. Just above it, there is liquidity that they've collected. So this demand, it can actually hold, and perform whatever we are wanting to see. I'm wanting to see the market, number one, come break there. Once it breaks there, can give a small pullback before a continuation, right? So for them to push that, this zone where it is now, it can actually help to facilitate that agenda of pulling back before a continuation. Remember what I told you about the three-leg movement: change character, pull back, then continue. Right. So that's what I'm anticipating there. So once I've almost all my details on the daily like that, the next thing that I need to do is to go down to a lower time frame, 4 hour, 1 hour. Let me look. If on the 4 hour and 1 hour or whatever lower time frames down there, they've changed, right? If ever they've changed, for example, in this case, 4 hour, you realize that this is the demand right there. Once you refine it according to 4 hour, that's point number one. Point number two, that's the same internal lower high according to the 4 hour as well. So it's also the same thing. So here they can even come, if they fail to break there, they can continue selling, right? That's just another, those are other perspectives that you simply be having on the market. So let's say they want to continue selling, they can come and continue selling from the supply there, right? That's for a perspective of someone who might just assume that they will continue selling, right? So that is the current range. This is the current range basically that you are focusing on. We have a demand there. We have a demand. So long we are above this demand, don't find yourself entering any serious sales above there. So long we are above this demand, because once you enter, they will use yes liquidity. If you just jump in without confirmations or without full facts, right? So on the 4 hour, this is the range. Once we come and break there, then we'll look forward for going all the way up. But for now, our focus is this one. So the next thing now is for us to go to 1 hour, 30 minutes. Let's look at inside structure. Let's look at the internal order flow. Has it shifted already? If it has shifted, it means that push so far to this current range or around the supply there. Because if it wants to sell, it will come and continue selling from this supply, right? Because according to this structure, according to this current structure, that's our previous major lower high, lower low there. This one, it's now also a lower low. Why? Because it managed to shift internal order flow. Internal structure, if you notice internal structure, it was shifted here. So the low that shifted internal structure there, that's our swing lower low. So according to this, you see they're still obeying bearish market structure. That's why I say even if we manage to take buys, of which those buys I think around maybe around the AMs, that's when we're going to get in those buys. Once we get in those buys, we can simply target this internal structure level first for now. Then once we see them breaking there, that's when we'll look forward. We'll just be shifting our stop loss higher and higher and higher and higher and higher. So on 1 hour, you can see they established this shift in internal order flow. They're now going up. So them going up, you don't just enter anywhere. You don't need to be so strategic. It now comes to proper knowledge, having the proper knowledge now on the market. Right now, someone is busy jumping into the buys, but do you have proper knowledge and proper understanding of knowing when to jump into a trade, when not to jump in to a trade? So those are things that people are not fully taught on. When knowing when to jump into a trade, when not to jump into a trade, and when to come out of a trade. So currently, you see this is liquidity, equal loss liquidity. Then on the 15-minute, I have a zone that is so beautiful on the 15-minute, where I'm anticipating beautiful buys to the upside. It's an untapped demand actually on the 15-minute, which is a very beautiful zone. So this week is a very, trust me, this week is a very beautiful week. Very beautiful week. Very beautiful week, as we are going to be having these swing buys. Once you get those swing buys, you're going to hold them the entire week, while other people, they enter, they come out, they enter, they come out. That's a lack of understanding. But some of us, we can even hold as far as the whole week and even weeks following, so long the structure is still the same. So yeah, this is the current structure for B5. I've started from the daily. I've started from the daily, shown you what I'm seeing there, 4 hour, at 1 hour. Now we are on the entry time frame, which is 15 minutes. So here you can see the equal laws here, clear equal laws, which is liquidity. To come wipe everyone out. Even here, this is an inducement. The pullback that doesn't touch the main zone. That's what we call an inducement. Those pullbacks that don't touch the institutional zone, which is your institutional supply or demand, those guys are called inducement. Inducement. They are there to induce early buyers. They're a form of liquidity, actually, a form of smart liquidity. A form of smart liquidity, which can also trap people who call themselves smart money traders, can be trapped by that. Once it's broken, thinking maybe it's not change of character to the downside. So that's liquidity there. This is inducement, actually. I wanted to write inducement. I don't know why I wrote dollars. Inducement like this. Inducement. That's the symbol for inducement. Equal loss. So that zone at the bottom where I'm anticipating to buy, basically, it's of high probability because of all these points. There's inducement, there's a liquidity, equal loss, liquidity lying above it. A lot of things are just happening. They've established fully our change of character. So it's going to be a very beautiful trade. Trust me. It's going to be a very beautiful trade around the AMs. I think by around the AMs, that's when it will be on our zone. So B5, this is the structure currently. That's the structure currently. That's the setup currently. It's still the same thing with what you saw in the beginning of the video. So that's where I'm anticipating to buy hard along with everyone. If we manage to give the signal in the free groups, wonderful. If we don't manage, I've explained here. I've explained here. Right, so that's it on B5. No time to keep on wasting there. Let me now go to the Nasdaq. Remember, last week we took gold sales, which were in profit actually, and there is a potential reversal that can happen on the gold sales that we took last week, right? We can get a reversal. If we don't get a reversal, it just means the market will continue. Just means the market will continue in the direction where it was headed, right? So I won't talk much about gold because of the reasons and the facts that we are still in the trade. We are still in the trade. We are still in the trade. So nothing much to talk about there. Nothing much to talk about on gold. We took the trade nicely on FOMC day that day. We took the trade nicely. So if ever they're going to pull back, they'll pull back up there. Because inside, you can see that inside they established this internal change of character. After that internal change of character, this is a liquidity here. This equal highs, that's liquidity. So if they're going to pull back, they can pull back. You can best sell your sales from there, from that supply, if they manage to pull back. So gold, I won't talk much about that for now. I won't talk much about that. Let's go to Nasdaq, which is presenting a very beautiful buying opportunity this week. Let me just clear my chart on Nasdaq so that you see that even when the opportunity presents itself, we don't guesswork here. These are things that we have been doing for a while now, not only doing it for a while, but also understanding what causes the market to go up and down. So Nasdaq, this is Nasdaq. Most people love Nasdaq. Gold, as I said, wait. If you are not in the sales as we did last week, if you're not in the sales, don't just jump in. Relax, slow down, breathe, relax. Relax, wait for the proper pullback into an extreme level, an extreme supply, an extreme order block, right? Before you simply jump into the trade. Right, on the Nasdaq, let me look at what is going on the Nasdaq. Nasdaq, on the monthly, you can see that we are still pushing up. We are still pushing up, even though we have some untapped demands that are here. That is equal lows there, which is actually showing a sign of a possible coming back to collect this liquidity. After they collect the liquidity there, if they collect that liquidity, the next thing to do is to tap into this untapped demand. So I'm just showing you overall what can even happen in the next coming months on Nasdaq. That's just a rough idea for you that can actually prepare you mentally for whatever will happen on the Nasdaq. Right, so that's the highest point there. Right, so on the monthly, those are the details that we can see. Nothing much to keep on adding. Let's go to the weekly. Let's go down to the weekly time frame. Looking so beautiful. Weekly time frame looking so clean. This is the zone here. That's the zone here. Right. So on the weekly, you can see that you can see to the left, from the left side of things, high highs, high lows, 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 high highs. Where did they break the bullish order flow? That's the most important point. That's the first point. Where did they break the bullish order flow? They broke it here when they came and changed to this character here. Right? That's a serious point now. So them changing character there, what does it mean? It means they're now wanting to come down. Them wanting to come down, there's this supply that they've left here, which they will most probably, because here this is inducement that is also bound to be collected. I'm still having a bias of something like this. Take out this inducement, equal highs, take it out, then they come. If ever they want to come and also take this liquidity, they can come all the way down before continuing up. But basically, coming up there is a higher chance because this is a weekly zone, weekly supply zone that they've tapped there, which is a beautiful thing, beautiful setup. I showed you how you could have entered this counter buys to the upside. So many reasons that you could have looked at entering this counter buys to the upside, targeting that supply, because you have an understanding that if you have an extreme supply and tap like that, if we get a reversal, it will come all the way up there. So they haven't fully touched, but I'm anticipating that's why I was talking about the buys that I'm anticipating this week. That bias is not just coming from my word of mouth. No. That bias is not coming from my word of mouth. I know what I'm saying. I know what I'm seeing on the chart. So on the weekly, we have exhausted the details. Let's go to the daily. Those are the major time frames for analysis. Once you go down to 4 hour, once you go down to 30 minutes, 15 minutes, there now you're just so trend line traders right now, they have this. They have a trend line right now and they are busy buying. They are buying right now because of the trend line. Okay, there's nothing wrong with the trend lines. Remember what I've been telling you. But if ever you just come and draw trend lines like this, then you make your trading decision based on that. You're going to have a serious problem. You have a serious problem because I've shown you so many times in which trend lines are being manipulated so many times. So many times in which trend lines are being manipulated. So that's one thing that you just need to. So yeah, for them to facilitate this pullback, they have to go up maintaining bullish order flow. Bullish order flow, that's what you're seeing here. High highs, high lows, high lows. So they are big now. So they can even continue here. They can even continue going up nicely. There's a demand that is there. A demand zone that is there. There's a trend line that is there. Order flow is still bullish. What else do you want? What else do you want? So let's go down to the 4 hour and look for further details. Further details on the 4 hour. Right. So let me go back to the weekly so that you see something here. Is it the weekly or the daily? Is it the weekly or the daily? Let me go to the daily. Right, on the daily. Okay. Nothing. Okay, let me just continue with the 4 hour. 4 hour. Right, 4 hour structure as you can see. 4 hour structure as you can see. So most people, that's where they get things wrong now. Identifying the proper structure. Identifying the proper structure. That's where most of you are facing hurdles and challenges in terms of trading there. Right? So now you can see that this is a high. Where is the low? Where is the law, whether it's internal law or external law? Where are the laws? This is an internal law, right? External law, someone can come and say this, right? Which is not a problem because you're anticipating maybe market to continue, maybe selling for now before they start buying. So now, if ever that is what is going on now, we now need to see the proper level, the proper zone now of jumping into the trade. You can see there's a supply, untapped supply there. Below it, there's inducement, there's equal highs, liquidity. There's liquidity basically. There's liquidity basically. There's liquidity basically. Right. So looking at this, you can see that they came and established that law there. Right? So long this law is not broken, someone can come and say we don't have a lower high as yet, which is also a fine fact, which is also a fine fact. So if they continue dropping now, remember I said there are other levels on the weekly and then the daily that they may be wanting to reach unto before even they continue pushing up. According to them, they want to even be violating. There's demand here, there's a fair value gap there, they can tap that before they continue flying up. So there are so many things that they even look at. There are so many things that they even look at. So, but that's not really important. The real important issue is you understanding now where we are in the market, where we are in the market. So internally, you can also see that internally they changed character. Was it here or there? Is here. They changed character. They came back to a demand, which was a simple sniper buy entry for Nasdaq. Buy went all the way. Simple trade. Right. So now, according to this, they are back now here. So if they break here without tapping into an untapped zone like that, or into that zone maybe above there, which is that supply there, right? It will still be fine, but it will mean that that's our new lower high. So here you can see they came and respected this supply so much there. So if they come and break down there, it simply means they are still what? They are still gonna continue giving us some bearish momentum kind of thing. So currently they are back here down here. So what I'm looking forward to down there is most probably a push. Because once you go to the 1 hour, that's where you see that the push is so necessary now. If you go to the 1 hour, you see that the push is so necessary because of certain zones that you'll find on the 1 hour that you won't see on the 4 hour there. Like if you go here, you go up there, there's a very beautiful hidden supply zone. Hidden supply just below it, there's a lot of liquidity. So that's a zone that is still also bound to be collected or to be tapped. That's why we can still have also beautiful buys from where the market will be. Because according to them, according to this, just this structure here, that's your, remember, that's your law. They changed character here, giving you a what? A higher high around there. Them dropping, so long they haven't broken there, they'll come give us a higher up until they tap into that and tap the zone that I drew at the top there, right? They can drop if they want to fully drop. If they want to fully drop, they will come all the way and drop from there, right? So that's the current structure right now on Nasdaq. Current structure here. Most probably here they can even push price down here into this low, then bounce off from there, fly up there, then drop from the top. So that's my current bias on the Nasdaq. Most people already buying, and I was laughing because I know those are just people of lesser understanding on the market. How do you buy while it's internal order flow? It's still bearish internal order flow. They even failed to break here. They're broken here. You would have actually started buying upon the pullback, right? So those are so many things that we look at and just laugh. We look at those things and just laugh. So yeah, the probability of them coming to tap that low is high, because if you look to the left, we don't have um, clear demand zones there. So if they are not clear demand zones, most of the times they'll just come and tap the low. Once they tap the low, then they'll fly up. So here there are two case scenarios, or two entry types that you can enter. Risky entries, whereby you wait for the market to come into the region, reject close above, you can enter immediately. Then once you have that 15-minute change of character, 30-minute change of character, you can actually enter now. If you don't enter, you can also wait for the previous previous lower high, or previous collect zone. So those are the entries that you'll be looking forward to. For now, it's still going down because it failed there. Still has maybe somewhere around this level to reach. Once it comes down there, it rejects, you can enter initial buys. Second buys, you wait for this internal order flow to shift. So when they shift, then you jump into the buy. So that's the analysis on Nasdaq. That's the analysis on Nasdaq. That's the analysis on B5. Both, I'm anticipating good money to be made there. Step index, already we are in trades. Already we're in trades. I can't talk much about that. Same as gold, we're in trades already. We can't talk much about that. This was a trade that has been paying us for the past days now. We have been benefiting out of this, which is a good thing, which is a good thing. So now let's just focus. Those are the signals that you find whether you're in the VIP, in the mentorship, or whatever. Those are the signals that you find. I don't just trade everything. I don't just trade everything. I don't just trade everything. There are specific pairs that I trade because of so many reasons. So let's just wait now for the market to tip into a zone. Nasdaq internal structure is still bearish. Slow down. Let's wait for it. Then B5, we're just waiting for it to come into the zone. Then we strike. Come into the zone, then we strike. So those are two major opportunities that I'm looking forward to this week. This week, I'm looking forward to that. Maybe let me see C5. C5 was kind of presenting something like something like a good opportunity. Let me check. Let me fully check. Is it an opportunity, or let me check. Let me check properly. Right. This is beautiful. What I'm seeing here, this is beautiful. Beautiful structure. So up here, they didn't break there. If you go to a higher time frame, you realize that they didn't break the previous low. The same thing, similar thing happened to B5. Remember what I've been telling you, those that have been listening since day one, that B5 and C5 have an, a, a delayed direct correlation. Delayed direct correlation, meaning they follow each other, but someone is always going to be ahead. One of them will just always going to be ahead. So they fail to break, as you can see. Fail to break, they broke structure down, meaning that's our lower low there, high, same high. Good. Right. So if they are still following this bearish order flow market, it means also now that we are still gonna keep on dropping. But before they drop, they will simply respect also internal market structure rules and regulations. So you not knowing all of that, you're at a risk now. You're at a big risk. All you know is just trend lines alone. My brother, my sister. So yes, they are going up. Remember, they want to push price back into the discount region around here. So once they come to the discount zone there, the discount region, if they want to keep on going up, my brother, gold when I trade, we checked that already. You watched the video, right? So if they want to maybe try to push up, they can come maybe and start pushing from that demand there. Someone can come and draw trend lines, wara. That's not what I remember what I've been telling you about trend lines. Someone can come and draw this trend line, right? Someone can come and draw this trend line, right? But look at how many times it was broken, came back inside, broken. A lot of fake breakouts, a lot of manipulations, a lot. A lot is happening on trend lines. A lot is up. That's why I tell you, understand structure. Understand structure. Understand structure. Understand structure. Understand structure. Once you follow structure, change of character there. Internally, they change character there. That's a law. Then your internal structure, whoever is going to break the internal structure is going to be the internal structure lower low, which is lower than this, right? Then around the top there, around there, up there, or here, around this value gap, I'm anticipating the market to come back. So crash 500 can even give you some buys, which are counter trade buys, right? Which are counter buys. Make sure whenever you're taking counter trades, you minimize your risk from your normal basic risk that you're used to. Right. So if you follow them here, there was a lower high, lower high. They came and broke. After they broke, they came back up. See now. So here, let's identify our proper zones. Our proper levels, our proper zones. If ever we're going to buy C5, wait for that, man. We'll watch the video later on. Right. So there's a demand here. Untapped demand after all. Untapped demand, they can decide to come there in order for them to buy nicely. You can actually buy from here. Because buying from there, you know that they've collected all forms of liquidity. And the probability of them using US liquidity is very low, more than someone who's just entering in the air, maybe out of pressure. So that will be a very good buying position there, selling up there. So this one, it's also a matter of patience. You're waiting for the market coming to the zone, because this is a high probability demand, because it has collected a lot of liquidity. A lot of liquidity has been collected there. So someone can even come, draw trend lines. We're not trend line traders. They tell you break out and retest, break out and retest. Trend lines are not market structure. If you just come here and draw trend lines without an understanding of market structure, you will be in trouble. You'll be manipulated. Most of the times you'll be manipulated. So yeah, let's go to 15 minutes. Let's see if ever we can get any information or any details on the 15 minute. Right, 15 minute, I see something beautiful as well. Remember, if they want to come and buy from this, right, up there, they must also have established a change of character coming down. The change character here gave us an adjustment, which is the initial move, which is here, adjustment equal highs, all one and the same things there. They came and tapped this one. That was a sniper selling opportunity. That was a sniper selling opportunity there, up there. Sniper selling opportunity. So here, you can now follow the same thing that happened externally here. You can follow it inside here and actually enter a sell all the way down. You can go to the 5 minute. That's why you go to the 5 minute. Once you have a 15-minute zone like that. So here you can see internally, they changed character here. After they changed, they left out a zone. And below the zone, there's adjustment. So that's also another setup. Beautiful. It's coming back up nicely. You can take sales from there, come down with them. So I will stop here on Crash 500. I'll stop here on Crash 500. So Crash 500, beautiful structure, beautiful setup there. They're coming up nicely in order for to drop nicely. So that's the thing. Crash 500, that's it. B5, that's it. Nasdaq, that is also it. Inside, we are still bearish. So wait around these regions in order to start buying around here. Once they come there, wait for internal structure to confirm. Once it confirms, that's when you jump into the trade. For now, you just fold your hands and wait. So C5, it's almost coming to the zone around the AMs as well. Maybe around around 1, maybe, depending. I don't know how long it's gonna take to get up there, right? But whatever time it will get there, just make sure that you can catch the opportunity if possible. If you can't catch it, it's also fine. It's also okay. So guys, I think we are done. C5 we analyzed, B5 we analyzed, and Nasdaq we analyzed. Most of the pairs that we didn't look at, we'll look at them in the live TikTok sessions. We'll look at them there, or even tomorrow during the day, we'll also look at those other pairs that we never got a chance to look at. So guys, I hope you benefited something out of the session. Did you gain something out of the session? Are we together, guys? Are we still together?
Yes, Mr. Mike.
Wonderful, wonderful, wonderful.
Yeah.
Power, 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 power.
I didn't see B5 chat. B5 chat. I missed. I came late.
Why did you come late? 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 Why did you come late, Papa? So there are certain zones or certain. So someone can go to the 50 and say, that was a double top, my friend. That was a double top, then it dropped. But that's not. That's just a term that you're using. But the real thing that happened. Tell us the real thing that happened. Tell us the real thing that happened. Most people are not able to do that. So C5 can give you some sales. B5, I'm looking forward for. These ones I'm looking forward for swings now. Swing buy. Swing buys. Swing buys. Swing buys on B5. Our first target is this supply zone there. But it's gonna be a very interesting week. Remember, when we come to say this week is a profitable week, we're not just saying things here out of thin air. We know what we are doing, we know what we are saying, we know what we'll be saying. So B5 also presenting an opportunity. This one now, it's a pro, because if you notice here, internally they've changed. They are now bullish now. So you know that if they are bullish like that, it's a different case scenario. It means if you take this buy, your probability of winning is higher than when the internal structure is still bearish. So that one is a good opportunity as well. Good opportunity on B5. Nasdaq, they are still waiting. Nothing much there. Gold, as I spoke about, we're in a trade already. We took sales on the FOMC day there. Then I said, if you want to join the sales, either wait for a pullback up there into the premium zone before the continuation of sales. So you can enter from the top there. Meanwhile, where it is just clustered. Those are retail zones, creating liquidity, generating liquidity. You call highs, generating liquidity there. So you can just wait for it to come up there, then you continue joining the train or continuing with those that will still be holding. So those are the opportunities and the setups that I'm looking forward to this week. Looking forward to make good money as usual. So I think the first one that can reach its zone, maybe it's gonna be C5, because it's almost, I think, yeah, maybe it's an hour 30, an hour 30, or to get to the zone there. But whichever way, remember I showed you the zone there. You could have identified it simply by the 5-minute chart there. Simple things like this. Right. So that's the thing. That's the thing, guys. That's the thing. So we are done here. We are done here, guys. See you. We are done here. You see the video on YouTube. See you. Thank you for your time. Thank you for being here.